Hello and welcome back to Synvestify. If you're new here, do not forget to subscribe for financial insights that are simple, clear, and actionable. In our last video, we covered how Synvestify can help you in the journey of personal finance. Today, we are diving deep into equity, what it is, what it includes, and how stock prices are determined. By the end of this video, you will have a solid understanding of equity and its role in building wealth. Ready? Let us jump right in. What is equity? At its core, equity represents ownership. When you own equity in a company, it means you have a stake in that business. This stake gives you certain rights, like sharing in profits and, in some cases, a voice in company decisions. Imagine a company as a large cake. Owning equity is like owning a slice of that cake. The size of your slice depends on how much equity you hold. The more slices you own, the bigger your share of the profits, known as dividends, and the more your wealth grows as the company succeeds. What does equity include? Equity isn't just about stocks. It's a broader concept that can take various forms. Shares of stock, these are the most common type of equity. When you buy a company's stock, you are buying a piece of the business. Retained earnings, these are the profits that a company reinvests back into its operations rather than distributing as dividends. Shareholder equity. This is the difference between a company's assets and liabilities, representing the net value owned by shareholders. Why is equity important, especially in the field of personal finance? Equity is important because it allows you to grow your wealth in a way that aligns with economic growth. It offers inflation protection, ensuring your money retains its purchasing power, and provides diversification, reducing overall portfolio risk when balanced with other asset classes. Owning equity gives you the potential for compound growth. By reinvesting your returns, you allow your wealth to grow exponentially over the long term. Equities also generate dividend income and represent ownership in businesses, allowing investors to benefit from corporate growth. Their liquidity and favorable tax treatment further enhance their appeal. Over time, equity investments tend to outperform other types of investments like bonds or fixed deposits. Now, let's talk about one of the most fascinating aspects of equity, how stock prices are determined. Stock prices are primarily driven by supply and demand in the market, but what influences demand? Company performance, strong earnings reports, or promising new products can boost investor confidence. Economic factors, interest rates, inflation, and overall market conditions can sway prices. Market sentiment, news, global events, and even emotions like fear and greed play a significant role. Here is an example. If a company announces a groundbreaking product, more investors may want to buy its stock, increasing demand and driving up the price. Like when Jio was introduced, Reliance price soared in the next quarters. On the flip side, bad news, like declining profits, can cause a sell-off, reducing demand and lowering the stock price, just what happened for Adani shares few days back. Equity investing isn't one size fits all. There are a lot of options with each having their own pros and cons. Here are some common ways to invest in equity. Investors can directly buy shares of a company through SEBI-recognized brokers. Equity investing can be done through mutual funds, where investors' money is added to a pool and then stocks are bought by experienced fund managers. Investing in businesses that are not publicly traded are also part of equity portfolio. And that's equity, a cornerstone of wealth building. Whether you are investing in stocks, mutual funds, or even your own business, equity is a powerful tool to grow your money over time. If you found this video helpful, please give it a thumbs up and share it with others who are eager to learn about financial growth. Let us know in the comments, what part of equity interests you the most? Don't forget to subscribe to Synvestify and turn on notifications for more insights. Make sure to check out our first video if you haven't already. The link is in the description.